Hey there, my savvy home buyers and sellers. This is Jeff Valeri, the Village Guru, and for today's video, we're here at Adventure Park in Lakewood Ranch to give you the August 2025 Sarasota and Manatee County real estate market update. Now, normally I do these videos in my studio at my desk where I can polish them a little more, but today I thought I'd get out into the wild and shoot an ad-lib video. Now, I have my stats here on paper, so we're still gonna give you everything you need to know. Plus, we're gonna go over the recent news that affects real estate, and then finally, we're gonna talk about why statistics. You need to read them properly because they don't always tell you the whole story. Now, before we continue with the video, if you have any questions about real estate, always feel free to call or email me, and be sure to like and subscribe this channel if you find it helpful. Now, having said that, let's get on with the video. So now let's get into the numbers for Sarasota and Manatee County combined. And first up, we're going to look at single family homes. So our first statistic are closed sales, which are down 1.1% year over year from the same time last year. Next, we're looking at median sales price, which is down 11.2% year over year. Now, keep in mind that median sale price doesn't necessarily tell you what's happened with every single home. It's simply the mid-range of houses sold in that area. When you see median price go down, it doesn't necessarily mean your house has gone down at the same percentage or up, depending on which way the number went, but simply that maybe there's more low-end properties selling that month, which would drag the median sale price down. Or if it's gone up significantly, maybe you had more high-end sales in that month. So it's important, if you're looking for what's actually going on with your house, that you do a proper CMA and the proper research, which we can always help you with. Next stat is new pending sales, and there's no change year over year, so that's a good sign. Earlier in the year, we were seeing that metric rise. Moving on to new listings, again, no change year over year. Now, when we look at active inventory, it is up 25% year over year. So that is something we need to keep an eye on. That's all the homes for sale, and you have to remember, real estate comes down to supply and demand, and if you have more homes for sale and less buyers, it's going to cause prices to go down. On the flip side, if you have more buyers and less homes for sale, that's what usually puts upward pressure on prices. And finally, the last statistic we want to look at are months worth of supply. And right now for single family homes, we're looking at 5.7 months worth of supply. Now, when you look at a real estate market, usually anywhere from 0 to 4 months is considered a seller's market. 4 to 6 months is considered a neutral market, and anything over 6 months is considered a buyer's market. So looking at 5.7, we are in a balanced market. However, it is leaning towards a buyer's market. That means depending on who you are, you might have a different experience. So one seller might sell fairly quickly, get close to what they're asking and think, oh, this is a pretty good market. While you have other sellers taking a long time to sell their home and they're having a lot of trouble. The best advice I can give you as a home seller is to make sure you price it right, market it aggressively, and have patience. You will get it sold. Now, moving on, let's talk about condos and townhouses. So closed sales are down 1.1% year over year. When we look at the median sales price, it is down 9.6% year over year. And when we're looking at new listings, they're actually down 5% year over year. Now, that's a good sign because the condo market has really been hit hard and there was a lot of listings coming on the market. So it's good to see that that metric is starting to finally slow down. Active inventory is up 17.8% year over year. And finally, the month of supply is sitting at 7.9%. So that's definitely a buyer's market as we've seen over the past year for condos. However, it is better than what we've seen earlier in the spring where we were looking at well over 9 months supply of inventory. So with the condo market, obviously it's had a lot of challenges, including the hurricanes last year, including the special assessments from new rule changes. So that's something that the condo market's working out. Also keep in mind that a lot of condo owners could be snowbirds and investors. So it's a different dynamic than single family home. One sign you'll see with condos are a lot of the sales now are in cash. So that's telling me buyers are moving in for deals. And if you're looking for a deal, buying a condo right now, you got a lot of options. All right, moving on, let's talk about what's going on in the news. Now, first off, I just want to say, as always, it's been a crazy couple of weeks in the news. And I mean, if we wanted to cover every single thing going on, we could be here for hours. Now, for this show, I simply want to touch on stories that affect us as buyers and sellers and real estate investors. Now, I want to get rid of the hype because I think a lot of times what we're seeing on the mainstream news is to keep us distracted from the real stories going on. So here we go. First up is a story about the US housing prices. They still keep climbing, but sales sputter. Now this is for the country as a whole. In June, existing home sales dropped 2.7%, hitting a 9-month low, even as prices surged to a record 435,300. Inventory improved slightly, but affordability remained strained with mortgage rates near 7%. So that's the same theme across the country we're experiencing here on the Gulf Coast of Florida. Interest rates still remain high, and that's really the last piece of the puzzle here. If we start to see interest rates come down, I think you're going to see a different market on the second half of this year. Okay, so next story I want to talk about is that builders are continuing to offer deep discounts in order to get sales. So home builders are rolling out hefty incentives, price cuts, mortgage rate buy downs, and free upgrades to draw buyers as demand softens. So I've talked about this in previous videos. This is a trend that's still continuing to go on. Builders are able to do things like offer rate discounts, mortgage buy downs, and also be flexible on the price. So as a seller, you really got to keep this in mind. If you have new construction that, well, there's some dogs that just went in the pond, that might not be too safe. I hope they're okay. I hope there's no gator in there. Anyway, yes. So as a seller, definitely keep in mind that your competition also includes new construction and that you need to be wary of it because sometimes they're stealing buyers away from you because they're able to offer these incentives and rate buy downs that don't appear on the sales price when you go to do a CMA. So keep that in mind. All right, so next story, and continuing with the theme that we've seen over the last few months, is Trump versus Powell, political pressure at the Fed. So Trump's continuing to attack Fed Chair Powell, calling him names and signaled intent to replace him if the rates don't drop. Powell is holding firm around 4.25% to 4.5% interest, citing inflation risks. This showdown is something to keep an eye on as it would have a direct impact on the real estate market. So right now, because they're refusing to lower rates, you're seeing rates around 6.5 to 6.75 on a 30-year fixed. My guess is that Trump's going to get his way in the second half of the year, and we are going to see interest rates start to come down. Again, let's keep an eye on that because that will change the dynamics in the real estate market. All right, so now I want to talk about a story that most people aren't thinking about, but it could have a direct impact on the real estate market as a whole, and that is the Japanese bond market. For the last 20 years, Japan has been at 0% interest rate or really super low, and that's caused something called the yen carry trade. Now I'm going to explain this really simply. The Japanese carry trade is that big companies, so pension funds, banks, other huge institutions with billions of dollars to invest, went to the Japanese central bank to borrow money that was essentially 0% interest rate, and then turn around and put it in the market and make a good profit. So one of the popular ways to do this was to go to Japan and borrow a lot of money at 0% interest rate, come back to the US and buy treasury bonds that would give them a 3 or 4% interest rate. So in effect, it's like printing free money. So now, you or I, we're not available to go to the Bank of Japan to borrow money. But again, we're talking about huge investments like hedge funds, pension funds, institutions like that. However, at this point, because of everything going on, Japan is the largest holder of US debt, well over $1 trillion. Now, the problem is Japan has started to face a lot of inflation, and that's forcing them to raise interest rates. Now, if Japan continues to raise interest rates, that's going to cause this carry trade to unwind. That means that it's no longer going to be profitable to do this, and you're going to have investors that are going to be forced to pay these loans back all in a hurry, which is going to cause a lot of pressure on the market. In fact, last year there was a real big threat, and we did see the stock market drop significantly in 2024 because this carry trade started to unwind. So we need to keep an eye on this. If you see anything like oil start to spike or US start to lower their interest rates, that's going to force Japan in essence to raise their interest rates, and it's going to cause turmoil in the market. However, in the next story, we're going to talk about the plan that the US has come up in order to mitigate this, to make sure that it doesn't have a lasting effect and causes a recession here. Okay, so we changed directions because the sun was getting really bright and I couldn't even see the camera anymore. Okay, so the last story I want to talk about is the passing of the Genius Act last week. I want to focus on the stabilization of crypto and treasuries. So signed into law on July 18th, the bipartisan Genius Act mandates that regulated stablecoins be fully backed one-to-one with US dollars or short-term treasuries, with monthly disclosures, audits, and consumer protections. So what this means going forward is that the US is going to allow companies to issue stablecoins that are equal to $1 US. So think about USDC, RLUSD, which is Ripple. They're also going to allow large banks and large companies with money transmitter license to also issue stablecoins. So think about when you use Zelle or Venmo right now for instant payments. So this is going to be expanded to the whole market, and different players are going to start offering their own digital dollars, all backed by the US. Now, the important thing about this is that every digital dollar, because of this act, is now backed by a US security. So in essence, if the large investors start liquidating their bonds, because we don't want the bond prices to go up and cause our mortgage rates to go up, now everybody using these stable coins will own a little bit of US debt and therefore soak up all the outstanding bonds that are being dumped onto the market because of this Japanese reverse carry trade. I think that's pretty genius. I mean, digital currency is coming regardless. The way I look at it is, at least it's not a central bank digital currency, but instead different players will offer their own cryptocurrencies. So I think all in all, the consumer will be pretty happy with it. The one thing is that when you buy a US Treasury, there is interest rates associated with that. However, for you and me, when we own one of these stable coins, we're not getting the interest. It's actually the issuer of the stable coin that's going to get that interest. And that's why the banks are going to all issue their own digital dollars. However, what you probably will see in the market are things like travel points or bonuses for using their stable coins. Now, this market is very early. However, things will start to work out the next 6 months to a year. So really, this is something to keep an eye on. But the intention is to keep the US dollar the dominant currency in the world, and I think it'll succeed, and I think the US will become the leader in crypto throughout the world. All right, so for the last segment of this video, I want to talk about real estate statistics and why it's important to read them properly, and also what you're looking at. Any statistic can tell any story the way the person who's producing it frames it. And that's the same with looking at real estate statistics. So when we look at market update statistics, they're a quick and easy way to see what's going on in the market. But if you're an actual buyer or seller that are looking to come up with a strategy on how to get the best results, sometimes you got to dig a little further, and I'm going to give you an example of why that's true. So first up, if you're in a market that's constantly going up and then all of a sudden prices start to dip and go down, and you can sense that the market's going down, if you look at your typical real estate statistic based on year-over-year increase or decrease, well, that report's going to still tell you that the market's doing really well, even if things have changed on the ground. So as a buyer, you might offer more for a house, thinking because you're looking at year-over-year, the numbers still look really good. Now, on the flip side, the same thing can be said when a market is starting to go up. So if a market's been in decline for a couple of years, and all of a sudden we're noticing that it's getting busier, we're seeing multiple offers and prices are starting to go up, if a buyer is looking at the year-over-year statistics, well, they're still going to be compared from the previous year, and obviously it's going to show a decline in whether it's sale prices or whatever metric you're looking at. However, on the ground, maybe over the last month or 2 months, things are actually starting to improve. So when you're looking at year-over-year, just be careful. You actually have to look at what's been happening in the recent past in order to predict what's going to happen in the recent future. All right, so for example, in the most recent report that I cited, I told you that active listings for single family homes were up 25% compared to the same time last year. Now, on its own, this doesn't sound good. However, if we look at the last 3 months of new listings, they've been steadily going down, showing that the market may be changing. In fact, active listings are down close to 7% since April to June of this year. So that's a really good sign. And even more encouraging are new listings, which are down 25% from April to June of this year. So looking at the past couple of months is a much better gauge to understand what's happening in real time. So what's the moral of the story? You need the right information to make the right decision. Simply relying on general statistics, while they might be helpful at getting a bird's eye view of what's going on, are not always effective for every single situation. Be sure to talk to someone and work with somebody who understands this, can build you the proper information to give you the best picture to make the most informed decision. I do this with all my clients. And there you have it. I hope you enjoyed this August 2025 Sarasota and Manatee County real estate market update. As always, if you have any questions about real estate, feel free to call or email me. Looking for a home in Sarasota, Lakewood Ranch, Manatee County, or the surrounding areas? Well, you know what to do. Give us a call, send us a message, and we'll have you set up right away. I'm Jeff O'Leary, the Village Guru. Let's get you moving.